There are certain common mistakes that investors do while buying stocks in the stock market. You can avoid these mistakes and become a profitable investor. First, buying stocks without understanding company's business. Once you understand company's business, you will be in a better position to understand the profitability and future growth prospects of the company. Number 2, buying penny stocks. By penny stocks, I mean the stock which are priced less than rupees 10. Many investors think they can buy penny stocks and once it crosses the 100 mark, they can generate good returns, which is always not the case. Third, buying stocks based on momentum. By momentum, I mean after a rally in a stock, many investors jump into that stock, which is not the right time to buy those stocks. Fourth, buying stocks which have corrected due to a scam or a corporate governance issues like Yes Bank or Adani. Always buy profitable companies with good governance. For more such content, hit the subscribe button. Thank you.